Hi, I'm Doug YYZ, and I make personal finance videos and review videos here on YouTube, and we just passed the 500 subscriber mark, so thank you to everybody who subscribed. It's a big motivator to keep making these videos. So before we do anything, let's take a look back at my video from 3 weeks ago and where I stood with the numbers and where I stand today. Today, by the way, is a Sunday, January 23rd, so the markets aren't even open yet. The video from 3 weeks ago, I was at 31,654, which had me up 53% since I opened the account. This week I'm at 31,747, which has me up 49% since I opened the account. So you can see that the dollar amount is more, but the percentage is less. So what happened during the last 3 weeks? I contributed $600, which I immediately bought a bunch of stocks with, so there's almost nothing left. But last week had a pretty big downturn. I'm actually down in 1 week, $1,115, which is 3% of my portfolio. And I'm not freaking out. You shouldn't either. If you have some investments and you saw a downturn in your portfolio too. Warren Buffett says this thing that when people get greedy, you should be fearful. And when people are fearful, you should be greedy. And that's how it is now. People are fearful. That's why we've seen the downturn. There's a lot of uncertainty, so people are selling things off or they're holding on to their money and they're not buying more. You shouldn't do the same. Don't sell things off. Don't hesitate to buy more, because now the stock prices are at a low discounted price. Now is the time to buy. So you kind of have to go against your instincts. If I had more cash on hand right now, I would be buying more stocks, but right now, I can't afford it. Hey, I have to show you the bad times as well as the good times, even though, like I said, it's not really that bad right now. And I'm in it for the long run, as you should be too. So holding on and not selling anything is really the best strategy. I was about to come on here and tell you to buy a stock that I was gonna buy, Maple Leaf Foods. I've changed my mind on that because I've read into it a little bit more. And by the way, you should be doing your research too. So if there's any company that you think might be a good buy, go to their website, their company website, look at their shareholders page, because they post their quarterly reports. And yeah, there's a lot of numbers there. And if you're not a math person, you might not want to go through them. I'm not really a math person, but they do write out an analysis of how things are going. They talk about their upcoming risks. They talk about their outlook for the rest of the year, some of the projects that they're working on. And that's what had me worried about Maple Leaf Foods. I thought this would be a good company. It's a consumer staple everybody eats. They're invested in plant-based protein, and they're also invested in raising meat without antibiotics, which that all seems on trend. That's what people want, right? Some of the things that had me worried in those reports though was last year the earnings were down by quite a bit. Another thing is the company's currently under investigation for the bread price fixing ring. That was a thing in Canada. I won't get too much into it, but they were colluding with supposedly colluding with grocery stores and bread manufacturers to raise the price of bread artificially. And on average, it's estimated that each Canadian household paid $400 above what they should have for bread over the span of like 5 years. Another thing that kind of had me worried during this, pandemic, it's kind of uncertain. They decided to close 3 meat processing plants in the GTA in Brampton, Toronto, and St. Mary's, and they're constructing a new poultry processing plant in London, Ontario. But when they closed those 3 ones in the GTA, they had to lay off a lot of employees and they had to pay out severance. That new plant that they're building in London is costing a lot more than they originally estimated. It was originally estimated around $500 million, and now it's up at $750 million. And they're saying that it's, the cost of materials has gone up. It's just, how much more is it going to go up before it's actually completed? And how long is it going to take to make some of that money back? I feel like with the price of meat going up, more and more people are probably turning to veganism or vegetarianism. I didn't feel good about putting money into this right now. There is another consumer staple though that I found. It's KPT Inc. KP Tissue. You'll know them. You've seen them in the grocery store all the time. Purex, like the detergent, Cashmere, Scotties. So basically toilet paper, things that you use to clean your house, to clean your ass. And that stuff isn't changing. In fact, people are being more and more obsessed with keeping things clean because obviously look what's happening around us. So I can only see this as a stable company. It's not only stable for residential services, but also commercial services too. Even if you think about, we're eating a lot more takeout now because restaurants are closed or people just don't feel comfortable eating in restaurants anymore. So there's a lot more takeout containers and napkins being being sent home. And so if you are a partial owner of a company that makes that stuff, seems like a smart idea. The other thing I like about KPT is that the dividend is high. It's at 6.8%. The stock is low right now. You can buy up a lot of it. And my prediction is over time, it's going to grow. It's only $10.39 right now. There are some risks. They, just like Maple Leaf Foods, are expanding. They didn't close plants like Maple Leaf did, but they are expanding a plant that they have in Sherbrooke, Quebec. They're adding some machinery too, so their output can increase. And they did mark that down as a risk because, one, it's expensive and they're worried that perhaps they won't get the sales targets that they're looking for. The other thing is KPT last year didn't earn enough to cover their dividends that they paid out. Another thing with the dividends is they haven't increased over the last 10 years since they started paying dividends. If you look at the banks, they just increased their dividend, BMO, Scotiabank, all the major banks, and that's a good sign because if you bought the stock when it was low and the dividend is increasing, you're getting even more value out of it. But I won't get too much into the banks. I will talk about the next pick that I have for this year. This is a growth one for me because I read a bunch of articles about it. It's called Magna International. They manufacture a lot of different automobile components for all the major car brands, BMW, Mercedes, Volkswagen, Volvo, GM, Ford, just pretty much every car company. They recently bought a small startup out of Boston that was to make these electric vehicles that were autonomous and they're like shuttles. So they bought that. They have some kind of contract right now with BMW to produce electric vehicles or electric vehicle components for them. So it's really moving in that direction that everyone seems to be moving in, which is toward electric vehicles and slowly away from fossil fuels. Here's just a quote that came from Goldman Sachs. Automated features developed by suppliers such as Magna will produce a 42% compound annual growth rate in global revenue over the next decade. That sounds promising to me. They also pay a dividend. So being a growth stock, you would think there's less of a dividend, but with Magna, they pay 2%. The last thing I'll leave you with is I also am missing insurance companies from my portfolio, and I would like to add that to the mix. They also pay dividends, and as you can tell, I'm a dividend investor. I like to see that money deposited every quarter or every month into my account so I can buy more stuff. So right now I'm looking at Great-West Life and Sun Life, but like I said, I don't have enough money in my account to buy any of this stuff, so it's gonna be slow, but I'll keep you updated. If you're not investing yet, and you want to get started, WealthSimple Trade is free. I highly recommend it. It's how I got started, and I'm gonna put a link in the description. If you want to sign up, use my link. We'll both get a free stock. We could get anyone, it's random what WealthSimple will give you. So sign up using my link. We might both get a great stock. If you do sign up, let me know what stock you got in the comments. I don't know if we get the exact same. We should. Thanks for watching. Thanks for subscribing. I'll see you in the next one. Bye guys.